Good morning and welcome to this month's OakCrest Insight, everybody. So what if I told you the biggest tax overhaul since 2017 just became law and nobody's really talking about it or noticed this? So while all of us were out celebrating the 4th, watching fireworks, President Trump was quietly signing a sweeping tax reform bill that I'm going to say rewrites your financial and tax future, right? Many of you might not be aware, but we have a tax team here with CPAs, accountants, do bookkeeping, tax prep, tax planning for hundreds of individuals and business owners. And I've been talking a lot with them over the last couple weeks here since this passed, and they have reiterated to me how exciting they are that really many of our clients are going to be surprised that they're going to benefit a lot from this bill. But we won't be able to really quantify that though until you file your 25 taxes, all right? But today what I'm going to do is give you a breakdown of some of the key highlights, what's in this final version that was passed, as it changed a lot, right? But what Trump is calling the One Big Beautiful Bill Act, right? And more importantly today, kind of talk about what it means for you and your tax planning future. Now there's a lot more to uncover here, right? But here's what you need to know today, or right now, in our opinion, on how this applies to you. First thing is, many of these tax cuts from Trump's first term were set to expire at the end of the year. That's why this is a big deal, people, because now they are extended or made permanent to help keep in place this versus you potentially owing more in taxes. So today I'm going to break it down into two parts, your personal side changes and a couple of business changes for our business owners. I'm going to run through the personal side first. Tax brackets, they are going to stay low, right? So before, the 12% tax bracket was going to revert back to 15% here at the end of the year. Now you have this long-term planning certainty to know what rates are going to be versus reverting back. The standard deduction in it is going to increase. Many of you take this. So if you're filing jointly and married, you get a $31,500 deduction now that is going to be adjusted for inflation. There's a senior bonus deduction, okay? So for you seniors over 65, it's temporary, only the next 4 years. You get an additional $6,000 deduction, right? So they weren't able to pass the Social Security no tax part of it, but this helps. There's income phases starting at $150,000 on joint incomes. Big thing here in Illinois is a SALT tax, your local property taxes, income taxes. There's a 4-year on this. It's going to raise from $10,000 to $40,000, applying to earners under $500,000. Again, it's going to revert back in 2030 though to $10,000. That's a big deal here. There's new deductions that some people are going to affect. Tip income, you can deduct up to $25,000 the next 4 years. Overtime pay, you can deduct up to $12,500 for the next 4 years. And there's a child tax credit. This is increased to $2,200 per child depending on your income if you qualify. The estate and gift tax exemption now is $30 million for a married couple. That's a huge deal. Illinois, though, remains at $4 million from a state perspective, so keep that in mind. Auto loan interest deduction. You can deduct now up to $10,000 annually on new U.S. assembled vehicles on the interest that you're paying on a loan. There are income phase-outs for this as well, starting at $200,000 married couple. You can get a charitable deduction now for if you're not itemizing, you're taking the standard deduction, you can actually get up to another $2,000 for your joint income on charitable aspects. Lastly here, you're looking here is what's called the Trump accounts, right? From an investment perspective, new parents, children born in the next 4 years get a $1,000 credit per child born, right? Really helps them out getting started financially. On the business aspect, a couple things. The QBI, qualified business income, is now permanent. It's a 20% deduction on qualified business income from pass-through entities like S-corps, partnerships, sole proprietors. So talk to your accountant about that if that still remains in effect for you. C-corp tax rate, so if you have a C-corp, no changes, still flat 21%. Big thing for a lot of our clients though is there's a bonus depreciation. It is now made permanent. So think about it, you own a business, you buy equipment placed in this year, instead of writing that out over a period of time, you can do 100% year one. So great if you have equipment in your business, vehicles, or if you're real estate professionals, really good from a tax perspective there. So we're going through a lot. There's a lot more to uncover here, but what does this mean for me, Ryan? What do I need to do now? Well, the big thing is just to recognize, hey, potentially this might affect you in where, right? So we're already meeting with clients that have overtime pay, other aspects that they're going to benefit, our business owners. Reevaluate your 2025 income strategy. Make sure you're kind of seeing some stuff here. Do I need to be doing anything different? Consider timing asset purchases if you're a business. Plan charitable again, right? Keep track of all those charitable deductions. Review your estate plan, especially here in Illinois, because now instead of reverting back, it's going to continue at these high levels. And really look at your tax bracket, right? Look at your deduction opportunities, things that you should be looking at throughout the year that I talk about. Instead of waiting till March or April to meet with your accounting team, do it throughout the year. This is a big deal, everybody. And as you can see, we're very excited because it will help not only you, hopefully we benefit from this as well. And I think it's just the beginning. We're going to still uncover some fine print on this and give you more guidance to come, but just wanted to give you some quick highlights here before we finish this summer. We'll continue to keep you posted, keep you updated, so that you can make smart, timely moves. We look forward to seeing you next month on OakCrest Insight.